Number 5, I wanted to just mention oil. You know, a lot of people are getting excited about rising oil prices, but there's a major overhead resistance coming. Now, obviously, the $60 round number has initially the oil just bumped its head, but that's far from a technical reversal. Like, I mean, that could be north of 60 tomorrow morning, right? I mean, that's nothing to think.
Well,
But
Patrick, one second. I hate to tell you this. Tomorrow morning, it's not going to be 60.
yes, it is good. Monday morning, fuck's sakes.
Okay, there you go, bud.
Yeah. You know what? I had one too many beers, whatever. Like I'm gonna watch. I'm gonna wake up in the morning. I'll be. Why is the market not opening? It's.
That's right.
But look at that 200-day moving average. I'm not a bit. To be honest, while I'm a technical analyst, you know, a CMT, all that stuff, I'm not a very big tracker of the 200-day. But
Seriously, like you don't like it?
I don't make trading decisions off of it. I don't.
Oh, really?
But it's worth knowing what everyone else thinks is important. And there's a ridiculous amount of people that track the 200-day. So for me to know where the 200-day is, there's liquidity considerations where a lot of traders make key decisions at those levels, right? Because of that, you can see that 200-day moving average is more or less coming in around 61.80 here on this charting on the on this continuous oil contract. So we're at a situation where we're just a few dollars away from not only the $60 round number. I don't think oil beats, even if it temporarily breaks above the 200-day. I don't think we spend any sustained period above there. If my intuition is right, this is an important technical level. I'm not short oil yet or anything like that, but this is a level to watch.
Patrick, you know what? I was Googling it because you told me you're a CMT, and I didn't realize you're so much into country music. I looked it up. Country music. Country music television. I didn't realize that there was some sort of designation for that, bud.
Yeah. No,
Okay.
you're a fucker. Anyway, let's move on. All right. So number 4, I wanted to touch on Canadian banks. Not just mine and your opinions about Canadian banks. Here I'm going to just put the XFN, which is the iShares TSX Canadian Financial Index. You can see what a monster V rally that's had, right? But guess who is doubling down on his short on Canadian banks?
Steve Cottrell.
Yes.
I can't even pronounce it.
Eisman, buddy.
Yeah, but that's
Steve
Cottrell,
Eisman. He so The Big Short, another great movie, but he is right there aggressively calling for a big mean reversion. I mean, he goes out and he says that this is not a repeat of 2007, 2008. But he's basically anticipating that there's a lot of downside in the Canadian real estate market and all of this, and he's of the opinion generally that this is going down. And we had obviously a big sell here. You think Powell's going to also save the Canadian banks?
No, I think it.
Well, come on. If that's
the guy from Office will do, actually, he might be right on this one. This might actually, and the only difference is that, one of the things that I think you have to keep in mind is that just because Canadian banks go down doesn't mean it's going to be a repeat of 2008. And as long as you keep that in mind, there's nothing wrong with saying that Canadian banks are going to underperform many other financial kind of companies throughout the world.
Yeah.
Because let's face it, we're way over indebted from a kind of consumer point of view. Our real estate market is up on a stick. There's just no way it can continue. I thought Trudeau was actually going to, on this recent budget, was going to do more to juice the economy and the market, and he actually kind of, I don't know, it's kind of blah, don't you think?
Yeah.
Like it wasn't really that big a deal. I have long contended that American banks are a much better buy than Canadian banks, and that you should be buying U.S. banks and shorting Canadian banks.
Oh, I just gagged a little in my mouth, but we'll see.
Why?
Just
Why?
kidding. No, you know
Yeah,
what? Your point's not right. Well, look,
Yeah.
I just don't think I want to buy any of them, to be honest. But
Oh
you know, I
yeah.
mean, if
Okay.
you want to do the long short combination, I would probably say I would take your trade if you're going to pair them.
Yeah.
Yeah.
I still think that Australian banks are even better than Canadians, though, on the short
Well,
side.
yeah, you just love to hate on the Aussies.
Come on, I love Australians. They're the nicest
Well,
people. I love them. But just because their banks and their real estate market is even more preposterously priced than Canadian real estate and banks, like that, why? Like it has nothing to do with like the people. It has
yeah,
everything
no,
to do with
I
the
know,
price.
I know. But you weren't. I'm just saying, like, well, yes, you know what? Like Grant Williams and other guys like that have been coming on and really putting a lot of emphasis. I mean, Jonathan Tepper and a number of them have all kind of voiced their big concerns about what's happening in Australia. But I think Canada's going to have its fair share of issues. But anyway, let's move on to number three. And number three, we wanted to talk about. I just wanted to touch on the currencies, right? Because the euro, the Aussie, and the CAD continue to demonstrate rather weak price action. We had the Sylvester Stallone clip on the cliffhanger when the euro made that break a couple weeks ago below the 1300 level, and is he going to hang on? Well, initially it's held, but boy, I just feel like the euro looks like shit. Like this really, in my mind, is still highly vulnerable for a breakdown.
Okay, so I don't disagree with you that it looks like shit. But you made fun of me when I said the Mercedes-Benz Jaguar spread, and you didn't like that trade. Why don't you pull that up instead?
All right, just so you can shame me. All right.
Because I really think that there's a better trade out there than just purely short euros.
So
Euro pound, I think, is a better trade.
even with the Brexit, like look, with the Brexit pending a week from now, like, is there not too much political risk here? Like, too
I
many
just
lottery
think that
tickets?
shit. We've been talking about the Brexit forever. It's
Yeah,
all
but
in
now
the-
is a kind of critical
I don't know.
crossroad.
Like, seriously, it's going to be 2022 by the time they settle the Brexit. I just don't think. I think there's a better trade in terms of being
Fine,
short something.
fine. If you want to be
So-
short this, I'm not gonna stop you. Whatever. Like, it's like
Either way, listen. Europe is stinking like bad fish that you've left out on the counter, right? Like, there's no doubt about it.
That's a low blow, man. That's
Well, no, but
stinky
like the
fish.
economy, yeah, their economy is terrible. So it would make sense that the euro is about to head lower. Having said that, it's still kind of up in the air in terms of whether the U.S. dollar is really ready to take off. If you go and do the DXY, we haven't really broken out of the range. Every single time we get excited about it and you talk about it on the show, it comes back into the range.
Yeah, but that doesn't mean that well, anyway, okay, you're going off topic. I want to stick with the three currencies we talked about. So,
Okay.
Canadian dollar, look how that rolled over. Like, I mean, it took no more than a week of trying to bounce off of its lows, and it's rolling right back down. We're below 75 cents. You want me to? Are you confused with this chart? Do I have to put on your USD CAD pairing?
Well, I was about to tell the real currency traders that.
Oh my God! All right, so here we go. We'll look at the traditional CAD, the USD CAD.
Yeah.
So, it temporarily broke down toward 133, and then it's now looking like it's going to the U.S. dollar is going to break out again.
I don't disagree with you.
And then look at the Aussie. That 70-cent level is like on the bigger picture weekly chart. So this is like a major support line. I mean, we give out 70 cents on the downside of the Aussie US pair. I mean, there could be a big currency trend that emerges. Anyway, so if there was a big US dollar rally coming, it's these three very weak currencies that may very well be leading the way.
I can't
watching.
disagree with you there, but wait 1 second. Go back to that Aussie chart.
Oh, there's no
Remember,
such thing as a bad
there's
tick shit? Oh, my God.
No such thing as bad tick. That's
Except for the
67
yen. You think the yen's going to go right back up?
I
How's
think
your
that there's
bad
no
tick
such thing
thing
as a
working
bad
on
tick.
the yen? You think we going back up there?
For sure, no such thing as a bad
Oh,
tick.
Jesus. Oh, my God. If we give it a couple of years, you'll eventually be right. Jesus. All right, so number 2, Treasury bonds. I've been taking a lot of flack from you, but you know what? Being just long Treasury bonds feels pretty good, I'll tell you. You call I'm pulling a Gurvich, but and then you're all fancy with your your
530
530 spreads and you're doing this, but you know what? Like, look at this chart on the 30-year. That looks not bad. And take a look at this 10-year. I mean, that's ripping, buddy. That's a bull market on Treasury bonds.
Yeah, listen, I can't argue with you there, but
I can't wait to cash in on our bet when Treasury bonds outperform the home builders, buddy.
oh
No,
God,
it-
don't
like-
give me that shit. So listen, let's pull it up. Let's 1 second. I gotta pull it up now that you've.
Oh,
like,
look, you're
thrown
still
down the
you're
gauntlet.
still ahead. You're still ahead.
Yeah,
but I'm going to win. I'm going to win. You are going
Okay.
to lose this bet. We still look.
And
It's
then
not
you
even.
woke up and the bed was all wet. Okay, that was bad. But anyways,
No,
go
no,
on.
it's funny. But Treasury bonds
Okay.
are ripping. The question becomes, where do you think the yields are going to? Do you think we're going to 2%? We had this debate. We already talked about this. I think we're going below 2. You said we're not going below 2, right?
No, we're not going below 2.
Yeah, and I took the other side of that bet. Holy cow! How are we
Okay.
going to track all of these bets? Because
We're gonna track them. We got them going because
all our
I want
listeners
to
are
make sure
gonna
I get
keep
all
us-
my stakes. I want to get all my stakes.
well,
Okay,
we're
let's
doing
move
the
on to
Duke and
number 1
Dukes.
there, buddy.
All right.
Yeah, well, number 1.
U.S. GDP. I mean, I think the final GDP is expected to be 2.4%. Do you think we miss?
No, I actually don't think we missed. I think the U.S. is doing just fine.
I'm not opposed to that view. Like I said, I'm far more bearish on the world than I am the U.S. in terms of data, and it's just it's your little kumbaya that Powell is going to take S&P to 4,000 shit that you're like drinking that Kool-Aid that I don't agree with. But I still think that the U.S. economy will be the last one to roll over. So I don't think that this has to be a miss. I think it could probably come in line, but we'll see, won't we? That's what we're gonna watch.
That's what makes a market.